Hi guys, Victor Mangena here from Pips Exclusive Forex. The time now is 12:40 p.m. South African Standard Time. That is 10:40 Greenwich Mean Time GMT. All right, so I've just posted a Euro-New Zealand dollar trade setup on the Pips Exclusive Forex premium group. So I thought I should explain it with a video so we can see the rationale behind this trade setup. So let's go to the chart. This is the daily chart at the moment that I have on my screen. So you guys know that I use the Elliot wave method to analyze the market. So we always, I always start by, just want to get the color here so I can draw and show you what the rationale of the chart is. So I always start by identifying the impulse. Right, we've got the drawing up. Right, so here's the impulse here. We've got the impulse here. And that's how the market operates. The market operates in such a manner that you get an impulse and then you get a correction. So we've got this impulse here, and then we've got this correction A, B, C. That is the basic Elliott wave theory. The first thing that you read about the Elliott wave theory, they'll tell you an impulse and then a correction. So here it is, the basic stuff. Impulse, correction A, E, C. Right? You can see the ABC in blue, the blue degree here. Right. So we had our impulse and then we had our correction. So it looks like our correction ended here. So what I see happening here is that I'm starting to see a new swing developing here in a WXY fashion. Right? So there's a difference between an ABC and a WXY. The WXY is a three-wave patterns. And A has got 5 divisions. So that is the difference between WXY and ABC. So on an ABC, you'll have your A with 5 divisions, and there are rules for this to be an impulse 1, 2, 3, 4, 5. You don't just label it 1, 2, 3, 4, 5 because there are 5 subdivisions here. There's specific rules for it to be an impulse 1, 2, 3, 4, 5. B, regardless of whether it's a WXY or the ABC, will always be a 3-wave correction. Right, so we are not here for education. We're just going to analyze this chart. So I don't want to waste time with the education. So I expect everybody who's looking at this video to at least have a basic understanding of the Elliott wave principle. Right, so I had this correction that ended. So I've got this new swing developing still in the blue degree. You can see this is still in the same degree. This is trending in the same degree. All right, so I've got this WX. I'm anticipating that I'll have an X here and then a Y there. So just to show you the degree here, so this is the correction A, B, C, joined up. And then here, the new swing that is starting here on Euro-New Zealand dollar, this is the one, WXY. All right, so this is the higher degree that we are looking for on this daily chart. Okay, so we're back on, just slight break in transmission there, but we're back online. So let me just draw what I had put on back, the drawings that I had previously. So we identified this correction A, E, C, W, X, Y, right? So that was our impulse initially, and then it corrected with an A, B, C right there. All right, and then the new swing that's starting in a WXY fashion. Right, that's what we have. So as I said previously, this is the highest degree that I'm looking at on this trade. The blue degree A, B, C, WXY, that is starting there. So now for every degree, there's a lower or a higher degree than this. So I need to go down lower to actually get the trade here. Let's go to the lower degree. We're going to use the red color. We're going to use the red color to identify the lower degree. Right, so let me use red there. So what is my lower degree here? My lower degree, I'm going to put in the red lines. That is this 1, 2, 3. that you see there. Actually, I should have made this lower degree yellow and the higher degree in blue, but that's okay. You understand what I'm trying to do. So the lower degree here, I've got 5 subdivisions. That is why I labeled this a and not a W. That's why. Right, so B is always a 3-wave. A, let's try to do proper drawing here. Okay, 3 waves here. All right, and then I see the same thing. 3 waves, right? That's the lower degree now. W, the same thing. It's got 3 waves as well, right? So what about X? The same thing. Can you see that when I go to W, that's 1, 2, but then this should go down as well, right? On the lower degree. So this is the trade that I am looking for here. That is the trade that I sent. All right, so we've identified that here we're going to have a trade. We're going to have this trade that we want to sell here, sell on this area. And then after that, obviously, we're not going to, this is going to take some time. Then we're going to be looking at this trade again in future once this one completes and we see what direction it gives us. So can you see how this forecasting technique can tell us what the market is going to do in the next 3 months, 4 months, or even a year? Just because we don't trade the lines, we don't trade trend lines, we trade patterns, and we can see how these patterns develop here. So at the moment we are on this pattern. This is the trade that we want to look at. So I'm going to clear the screen and just show exactly how we're going to take this trade. And I've already posted this on the Telegram group. So let's clear the drawings. Clear the drawings, and then now we're going to go to the lower time frame. We're going to go to the 4-hour chart. So just notice that we're going to be here when I go down to the lower time frame. All right. So this is the trade that we're now looking to take. As you remember that the red degree, with the red degree, the red degree was doing something like this, right? And then the lower degree, I'm actually doing it the opposite. Quickly do this. Let's go to the way it was on the higher time frame. I'm trying to replicate what I had on the daily. Okay, so on the daily, I had something like this, right? And then the lower degree is this one here that I have. So I'm expecting this trade here. This is what we're gonna take. So how do we take this on the 4-hour chart? I'm gonna clear out. I think this is clear. We're gonna take this trade. Clear all drawing. So I'm anticipating a break of this line here, of this flag basically. So when this breaks, then I'm going to take a sell here. So this trade is about, this is 1.56, targeting about 150. So about 600 pips. It's not a short trade. It's not a short trade at all. It's a big trade. So that's what we're going to be looking at. We're going to be looking at plus 500, 600 pips on this trade. So that's how we're going to trade it. So let's just go to the lower time frame, to the 1-hour chart, to see how we're going to take it. So if this breaks, we're going to be taking the sell here. So I'm just going to go to the lower time frame, just to the hourly chart time frame. So just remember, in terms of the degrees, you can do that and all the way down to an infinite time frame. So it still looks clean on the 1-hour chart. I think it's low enough for us to take this trade. If we get a proper close below this line, although I do not trade candles, just for information. As long as it breaks this flag and then it closes properly, I see a clean break, then it just tells me that my pattern has changed and my swing has started. So that's what I'm going to be looking at on this trade. A break of this line, this flag line, I'm going to be taking the trade. Okay. All right. Thank you. I hope you enjoyed the video. Cheers. Bye-bye.